It's just been happening since I've been alive. If you think about it, there have been, there's decades we've known that there are certain things happening that had to be addressed, and they're never addressed. And we know why they're not addressed, because any politician that comes out and says we need to make drastic cuts, we need to make big changes, they will not get elected.
Right.
And it's unfortunate because we get closer and closer to kind of falling off this cliff. So now we're at a point where we're paying more on the interest than we are on the principal of what we owe, and every day it continues to accrue, and we haven't even made any efforts to stabilize, much less reduce our debt load. So the question is always, at what point do we hit that wall? At what point does it just all come tumbling down?
All right, welcome to the Angel Research Podcast. My name is Jason Freert, and I am here with Jeff Siegel. What's up, Jeff?
What's up, man? How's it going?
Good. It's been a little bit since you've been on the show.
Yeah, a few months.
Is there anything to catch us up on?
Well, I think we're all going to die.
Yeah.
No.
This is an interesting time to record this. So it's Monday, August 5th? Is it 4th?
5th, I think.
The 5th?
Yeah.
And this morning the markets, on Friday there was a big kind of sell-off, I guess, after the jobs report. And then, the VIX is up like huge, and, the markets are down. So there seems to be a lot of panic. Mm-hmm. And we've been kind of talking about this for the last couple of weeks, couple of months.
But we even said a few days ago when we set up this podcast,
yeah,
where we said, you asked me what I want to talk about. Yeah. And I said, well, it may not be a popular thing, but I think things are getting bad. Right. I'd like to talk about that. And, I'm not happy things are bad, but,
right.
It's the timing is relevant.
Right. So, I mean, what's your take on what is, causing this? I mean, before we started recording too, it's like people panic, right? Mm. So like Schwab was having issues like people logging in. It reminds me of when, and I didn't even check Coinbase, but like when the crypto market would go up and down, mostly down, like Coinbase would be like down because everybody was trying to log in, maybe to just check their account, but also maybe like sell their shit. And then people would be pissed because they're like, I wanted to sell, and now I couldn't log in, and now it's down 20%.
Yeah, I think that shit's suspicious too anyway.
Yeah.
I mean, come on. It's like if you're running a Schwab, right? You mean to tell me they don't have the highest level of IT?
I mean, look, there's only, being in that background, there's only... You set up your pipes to be able to handle X number of,
right?
And it always like somehow surpasses it. You know what I mean? And you can't operate at that full capacity, like it's just too expensive. But you need to basically have auto scaling in there so that they should be able to do it. But I think they never estimate. They never can come up with an estimate that is feasible. It's always like more people than they expect.
Well, and it's also I don't know if you remember in Fight Club. I think it was a Fight Club when they were talking about the insurance and airplanes. If the airplane goes down, they calculate what it will cost to pay everyone off.
Yeah.
And versus what it would cost for the insurance, and say, well, if we don't pay this much, yes, the plane might go down and all these people could die, but it's going to be cheaper for us to pay off all the dead people's families than it is to pay this extra money.
Right. I mean, that's the calculation that they do. And so, but I also think like all these, Schwab and Coinbase and all these, they have in their terms, it's just like they're not required to give you, you know what I mean, like access. Like it's, maybe someone will switch because of that, but
highly unlikely.
People,
I mean, I don't mean to cut you off, but I think that a lot of people, they have their accounts, and it's for the most part, if 99% of the time it's working, they don't want to deal with moving things around.
Yeah. I mean, if it continues to become an issue, then maybe. But the way I look at it is usually it's a built-in sort of panic restriction thing, because like what you want to the market's down, you're going to log in, and what are you going to do? Sell all your shit? I mean, maybe. But if you're doing it during a day like this, like it's panic selling.
Yeah.
Like you would have been doing it a couple of weeks ago. Like some of our subscribers, I know one on the Discord like a couple of weeks ago was like, hey, like, I hit my, if you have stop losses in there, then they would have already probably triggered.
Right.
So that's a question for, I guess, you as running like the portfolio, like, how important are stop losses? How important are just like not panicking?
That's the most important thing.
Right.
Not panicking. Even this morning, reading things on Twitter and getting emails from people, and it's just, should I sell? I'm like, no, man. Like, never. This is the worst time to sell. Everything's crashing. It's just like we've gone through this decade after decade.
Right.
And it always turns out the same. All the people, like the market tanks, and everyone dumps everything, and then they're just like, oh, if I just would have not freaked out,
right.
Right.
So, I mean, that brings up, I guess, a good point in terms of the outlook into the future.
Right.
So, is your take bearish more long term, or is it, negative just for the next 6 months? Mm-hmm. Or, what I mean? How are you positioning yourself to prepare for, I guess, maybe a variety of scenarios?
Yeah. So I have become a very sad long-term bull, or bear. I mean,
right.
Bear, and I think it's for a number of reasons. And I actually made some notes so we can go over some of the reasons. But I think it's bigger than an economic thing. I think it's kind of a social stability issue that's happening at the same time, which provides the perfect storm for anyone, if you think about it, who wants to do us harm. Social instability and an economic meltdown. People are angry. People are broke. They're angry at everybody. You become quite vulnerable in situations like that. So there are I have 6 things that I wrote down that I think are big contributing factors to why I don't want to say necessarily bearish on investing. I mean, there are ways we can capitalize on this, but I don't think the outlook for society in general is positive. The first thing, obviously, I wanted to bring up was the national debt, which just hit $35 trillion, which is, I believe, is more than $100,000 per person.
Yeah.
Now, we're paying $2 billion per day just on interest payments.
Yeah, that's the bigger thing. I think people don't, you know what I mean? And they're talking about maybe cutting, rates or whatever, but they've been elevated and they just continue to accrue.
Mm-hmm. And here's the thing, and this has been happening since I've been alive. If you think about it, there have been, there's decades we've known that there are certain things happening that had to be addressed, and they're never addressed. And we know why they're not addressed, because any politician that comes out and says we need to make drastic cuts, we need to make big changes, they will not get elected.
Right.
And it's unfortunate because we get closer and closer to kind of falling off this cliff. So now we're at a point where we're paying more on the interest than we are on the principal of what we owe, and every day it continues to accrue, and we haven't even made any efforts to stabilize, much less reduce our debt load. So the question is always, at what point do we hit that wall? At what point does it just all come tumbling down? Obviously, if I knew the answer to that question,
Well, the date, is very interesting, and I know it kind of seems far off, but it's really not. I think it's 2031 is when the Social Security.
Is it 31 or 33?
Well, I think it's slowly being reduced,
okay.
Right? Like the time frame.
Okay.
It's maybe it's 33. It's less than 10 years. I know that. So it's and we're about to 2024 is going to be fast over, and then we're essentially looking at the next 8 years. Like, say Kamala wins, like she could be in office when this has to be like dealt with, and so it's every president and administration kind of wants to kick it down the road. But there's a it's coming, and I think it just seems further in the past, but or in the future, but it to me under 10 years, that's when you really start to be like, this needs to be addressed.
Well, it also becomes personal for me. So I'm Generation X, so I'm 53.
Oh, yeah,
There are
it's
people,
going to go on.
But there's other people. Like, I'm fortunate that I have retirement accounts.
Yeah.
So I've never expected to rely on Social Security, but a lot of people I know are relying on that.
Yes.
And they're going to retire in the next 10 to 12 years.
Yeah.
I don't think they're going to get anything.
Yeah. Yeah, I think anybody that's, like 50 and under and probably, like you said, like, it is kind of like, I'm not really expecting it, nor do I really want to try to live off of whatever that is. Because what's basically going to happen is it's not going to run dry and just no one's going to get paid.
Right.
Everybody's just going to get paid less and less. The benefits are going to slowly reduce. Right. So they might come out and be like, oh, we passed this law. Now it's not going to run out till 2040 or 2045. But the benefits that people are getting, which is already, if you have to survive off Social Security, like very difficult, it's going to be like, no, this is just sort of like a little thing that you get.
Well, it's even worse when Social Security I think they just announced the cost of living adjustment, and obviously it doesn't keep up with inflation. So the money that you put in is actually, again, we already know this, it's worth less now. And that is just going to get worse and worse as we go forward. So even if they reduce the amount that you get for your monthly check, reduce that by even more because the purchasing power has disappeared from that.
Yeah, so it's bad. And I think most people get that. I mean, if you're listening or following us, subscribing to our newsletters, I mean, there's no way you're expecting that, and it's probably part of the reason that you're trying to get ahead with your investments, because you want to have a retirement that is supplement and that be your main retirement income, and not be relying on Social Security at all.
Well, I actually want to talk about that a little later, because there is a plan that I've shared with my readers that does provide monthly income that's separate from Social Security.
Right.
It's very, very safe. It's very consistent, and when you look, if you compare what you earn in the returns, it actually beats inflation. So we'll talk about that a little later.
Okay,
but
great.
So we could talk about all the horrible things that are happening, but there are solutions.
Well, yeah, I mean, that's where it's sort of fun to sit around and talk about like how everything's you know what I mean? So, but there is, you can do one of two things. You can just complain about it, or, and do nothing, or you can complain about it and actually prepare. So that's, I think, the point of going through all this. So hopefully, like, no one jumps off a ledge before they get to the actionable part of stuff. But anyway,
no, it's not ledge jumping material.
Yeah.
No. So that was the big one,
right.
from our standpoint when we're talking about economic security, because we say the national debt, but that's us. We are the national debt. Right. So it affects us. And we talk about inflation a little bit. I have that in here. Continue to eat away at purchasing power. That's not even if they're talking about an emergency cut. They were talking about an emergency cut today. That's not going to fix the problem over the long haul. Outside, I'm increasingly worried about our vulnerability to cyber attacks, banking installations or institutions, water infrastructure, military installations. So we don't read about this a lot. It doesn't come up in the news a lot. But if you can do a little digging, you can find out how many attacks happen every day to our infrastructure.
Well, and we just had one. We kind of, that was national, news, so to speak, with this, CrowdStrike update for the Microsoft systems. I personally didn't really experience too much of it, although I just got back from the West Coast and we flew Southwest, which was not affected, but those four major airlines, Delta,
American, United,
that had issues, and it seems to have been sort of resolved. But it's also something where it's like a natural disaster. At least with the natural disaster, you kind of have some like planning, like, oh, hey, there's here, like maybe we ought to do this.
We know
like,
there's a hurricane coming.
yes.
Yeah.
So, but this is like you wake up and systems are down, just down.
Yeah.
You know what I mean? And it's something that increasingly, every minute of every day, we become more reliant on those computer systems that are vulnerable, and we become more and more interconnected, so that this system's down and that means this and this, there's a domino effect that is in place.
Well, I think it was actually a good warning, I think, for a lot of people, because it was temporary, and it, like you said, it disrupted things, but it wasn't an end of the world situation. But when that's the first time that's really happened on that level. So,
and that wasn't even a attack.
Right.
That was like some dude, forgot a colon somewhere, and like no joke. I mean, that happens.
Right.
So obviously, I think the rollout was a little strange. It's like, hey, you don't but I mean, that's the way things going. Like when there's a huge vulnerability or whatever, these software companies try to fix it as soon as possible, because not only is there so many systems out there that are vulnerable, but like the hackers are like, oh, they know, and they can deploy it out super fast.
Well, that's a good point. So what I think is going to happen is when we do have a real major cyber tech, it will be coordinated. So it's not going to be just, the flights are down.
Yeah.
It's going to be the electrical grid. It's going to be water filtration systems in our water infrastructure. It's going to be the airplanes. It's going to be the banks. It's going to be everything that we use, right? But it's all going to happen at once.
Yeah.
Again, I'm not trying to be like, it's all the end of the world. But I'm just.
You want to prepare. You want to prepare for that for sure.
Because these are reality. Like, I don't doubt that at some point this will happen. At what degree that's going to happen, I have no idea. But we do know for a fact, if you read some of the DoD reports that have been. What do you call it? The Freedom of Information Act that has come out, stuff that goes back to the 80s, that they were saying we know they know, like, this is what we think that's going to happen, and everything that they said they think is going to happen has happened, or it's starting to happen. So, and when you think about, and I mentioned this briefly, a coordinated cyber attack when everything goes down in a country that is so divided politically and socially, and you have more and more people that are struggling to make ends meet. I mean, you're just putting fuel on the fire. So again, this is a very serious vulnerability to the stability of our country. So I'm very, very concerned about that. I'm also very worried about this upcoming election. Not in terms of who wins. I think we're fucked either way, in terms of who wins. But there's going to be more violence. I know it. There's no way there won't be. I mean, I think it's weird that one of the people that's running for president, Trump, who's running for re-election, was shot. And they're like, oh, the Secret Service made a mistake. The Secret Service doesn't make mistakes. I mean, I've listened to enough guys that do this for a living, the guys that have previously worked for Secret Service, and the guys that are consultants and do this stuff. And you saw it, and everybody saw it. There's this big building right in front of the guy, and there's nobody there. And for minutes, people are like, there's a guy up there. And, oh, yeah, I don't see anything. Come on, man. I'm not a big conspiracy guy, but I don't buy for 1 second that was just some random dude that didn't have any social media accounts, right? And he's just some random dude that.
So what, you think it's a CIA plot?
I don't know what it was. I think there's definitely people that don't want him in office. But I also think that if it was coordinated by like the CIA or something like that, they wouldn't have done it like that.
Right.
It would have been like, oh, he had a heart attack.
Yeah.
But I just think the fact that we're not talking about it anymore. What was that? When did that happen? Like 4 weeks ago?
Yeah, it's kind of old news.
But this is a major candidate running for the president of the United States.
Yeah.
And 4 weeks later, oh well, that was a cyber attack. Okay.
Yeah.
Okay. So I'm very, very concerned. If Trump wins, I think there will be attacks on his life. If Kamala wins, I think there's going to be attacks on her life. But more importantly, I think there are going to be attacks on just individual people that are out in the streets, people that are pissed off.
Yeah.
You voted for Trump. I'm going to take you down. You voted for Kamala. I'm going to take you down.
Yeah.
We've already seen a little bit of that, when Trump was president, and when Biden was president.
Yeah.
So I really fear for our country after this election and even leading up to this election. And it's very frustrating too because you have to talk about politics when we talk about preparing for the future.
Yeah.
And people say, oh, you shouldn't talk about politics. But I'm like, but we have to talk about
No,
politics.
you do. I mean, it's interesting because there's a lot of different factors for why the market has kind of dipped out there. I think it's in technical correction territory now, which is what, 10%. I mean, the market is down. Almost. I think the Nasdaq was down like 6 or 7% this morning.
Mm-hmm.
I don't think. I think it's kind of it came back a little bit, but there seemed to be after the assassination attempt, and then like people were like kind of rallying behind Trump and like, hey, look, this is a cool picture. People were like, okay, like we kind of thought he was going to win, but now we're like pretty sure he's going to win, and like markets are coming down. And then you kind of had this like, oh, like Biden stepping down, and there's this like Kamala stepping in, which I always said like at the very least Kamala is going to look like she knows where she is at on the planet. Right. You know what I mean? Like she's going to be giving a speech and she's like, I'm at this location and I'm running for president, whereas Biden was starting to be like, where, like what? Well, so now now she looks at least way more competent of a person.
But I hope people call attention to the fact that 3 or 4 weeks prior to him stepping down, oh, he's doing great.
Yeah,
no, it's like, come on, man.
Yeah. No, people I think are starting to see through that. So it's really difficult, but I think at least there's some hedging going on in the fact that, hey, maybe Trump's not gonna win. And typically, the prevailing wisdom has always been Republicans are a little bit better for the markets. And Democrats are gonna, I don't know, raise your taxes or whatever. Who even knows what's gonna happen
it's the
now?
Same thing now?
Yeah, they really all are doing that. So I don't know if that, but it at least is something that you're going to have to want to consider when you're talking about your investments.
You bring up a very good point. So I agree with you. If Trump wins, the market will stabilize and we'll be good to go. If that is your primary concern, I just want to make sure my portfolio is well.
Yeah.
Then
what other concerns? This is an investment podcast,
no, I know.
Jeff.
But
trying to make some money.
But what I'm saying is, it'll be good in the short term.
Right.
Right. If Kamala wins, the market's tanking.
Yeah.
But outside of the market, if we look at just the overall health of the economy, and I wanted to make sure I wrote this down, so I gave you the right information. Because you were talking about, and historically that's always been the case, right? So Republicans are kind of like, okay, Republicans in office, we're a little more fiscally restrained as opposed to Democrats.
Yeah, and I don't want to say, I mean, the Clinton years were great for the market. You know what I mean?
Right.
I think it does depend on the actual, president, but it's just, we have sort of a case study now, like Trump actually was president before, and so it's like, oh, like, okay, we didn't, all these people that think like, oh, like Trump's gonna end democracy, is like, he was already president and he didn't like, he put a bunch of people that probably didn't know what they were doing like in charge of stuff, so maybe he'll, I don't know, put some different people in that will end democracy. I don't know, I don't buy that.
I'm not worried about that.
But it seems to be that that was the prevailing opinion. Anyways.
Well, yeah, and again, there's truth to that. But when we go back to, we were talking a little bit before about debt. It doesn't matter if you're Republican or Democrat. Every president, there has been either not necessarily directly increase the debt or as a result of their actions over time increase the debt.
Yeah.
It could be as simple as not changing a tax code or something like that. So I was curious to know how much was borrowed to add to our debt during the Trump administration and Biden. And Trump administration borrowed $8.4 trillion during his time in office, $4.3 trillion for Biden. Now, to be clear, there was no COVID during Biden.
Yeah,
So
I was going to
that's
say
a
most of that
big-
is, I shouldn't say most of that, but yeah, there's a large amount. Although there was a lot, it was like both of them had the COVID. Because but most of that was during Trump.
Right. It was, and I'm not saying I particularly care about Trump or like him, but I can't blame him direct. Well, there are some things that were happening during. Should he have done, given out all the checks and everything like that? But the one thing he did say, he said that before he ran, he said with his tax cuts, the economy would grow at 3%, and maybe as high as 6%. It grew at 1.45%. That's with COVID. If you take COVID away, the amount that was spent during COVID, you exclude that, the economy grew at 2.67%. So the idea that Trump or Kamala can come up and say, hey, we're going to reduce the debt and not give us any particulars about that. If you believe that, you're a fucking idiot.
No.
You know?
I mean, my favorite is this time of year is when people try to act like the president has control of gas prices. No. Like you see the memes like, oh, when Trump was in office, it was only like $2 and now it's like that shows a complete like lack of understanding of like the global oil markets.
And also, again,
how
to bring up COVID,
controlled.
nobody was driving.
Yeah. So, but people love, you know what I mean,
Yeah.
to cherry pick that stuff. Yeah, I mean, I think, at the end of the day, it's how much is the debt going to increase? It's not, is someone going to actually like solve that issue? I guess the question is, like you said, when will it actually start to break down?
I don't think it will be solved in time for it to break down unless the people in this country decide to vote for a third party, someone who actually wants to address these things, regardless of how popular they may be. Chase Oliver is the Libertarian candidate, and he has discussed specifically what he wants to do to address our debt issue. I don't know if it's the right thing to do, but he's bringing it up.
Yeah, but we won't find out because he's not going.
He's not gonna win, and it's unfortunate that if. It would be good, though, if he could get on the debate stage. And we saw this with Ron Paul, too. When Ron Paul got on the stage, we kind of knew he wasn't going to win, but he forced the other candidates to address issues that they did not want to address. Yeah. And now we're not seeing that.
No, and they're not going to let. They won't even, they won't let RFK on, and he was polling, pretty high for an independent candidate. So and they won't let him do it. So and both of them don't want to because they're gonna, you know what I mean?
No, neither want. Well, I think what Ice-T was talking about. He talked about the two. He's like, isn't it interesting that the Republicans wear red and Democrats wear blue, just like the Crips and the Bloods? He's like, but these are bigger gangsters. It's like they control everything, and they're not going to give up control. Yeah. I think really, and the Ron Paul thing is interesting because I think after Ron Paul and prior to that maybe Ross Perot, but after Ron Paul, I think both sides of the duopoly realized we cannot give them airtime anymore.
Yeah.
And that's why we have not had another Ron Paul.
Yeah.
Even, what's his name? The former congressman from Michigan. Oh, Justin Amash. Justin Amash, who was Republican, became a Libertarian, and he has talked a lot about our debt issues and just not taking care of the things that need to be taken care of right now. And he does it. I think he showed up on a couple of talk shows, and you never heard from him again. Now he's running again for I think either Senate or Congress in Michigan, which is great. It would be good to have one person in there that wants to bring up these issues. But the bottom line is, the power structure that exists now is not going to let anybody else in. So as an investor, you have to be conscious of that and realize no one's going to help you. No one's going to give you your Social Security. No one's going to help you in a time of crisis. And if they do, it's going to end up screwing you down the road.
Right.
We got all those checks during COVID. Well, all that did was increase our debt and make us more vulnerable. So it was nice to get some checks, but it didn't fix anything.
Yeah. No, there's definitely a lack of long-term planning that's going on there. So, I mean, what does that mean?
Well, let me say there's two more things I want to say that are adding to the economic turmoil that we're facing right now. One is our involvement in Ukraine and Israel and everywhere else we go. The amount of money that we are spending, that you and I are spending in these places is absolutely absurd. And I think Joe Rogan talked about this too, and I agree with him 100%. How is it, that we have people in this country that can't find jobs, or they can't find good jobs? We had the thing in Hawaii, was it a few years ago, in Maui, when the place got completely devastated, and they were giving a few $100s for the people there. Oh, but we can send literally billions of dollars overseas to Ukraine, into the Middle East, and God knows where else. That debt is building up too. And then finally, and I don't think enough people talk about this, is the addiction crisis. So I did find this interesting data point. The opioid crisis cost the U.S. nearly $1.5 trillion in 2020. A lot of times we look at it and say, okay, well, this is an immigration problem, or maybe we're not tough enough on drug dealers. And I don't know how long we have to have this war on drugs to realize that we don't win.
No.
We will never win. So, and no one is taking it seriously. And I wonder if someone could come forward and present this not as a social issue or a social crisis, but an economic one. Maybe that would make people realize that we really should pay more attention to this. I mean, we talk about $35 trillion at our debt, but we spent $1.5 trillion in 1 year battling the opioid crisis. It seems to me like there's something we can do, and no one is addressing it. And I don't foresee anyone addressing it because it's politically unpopular.
Right. Yeah, it's tough. I mean, we've talked about this multiple times on here about like what could possibly be, because it's not necessarily like people kind of think that there's these are like lower economic status people that are having these struggles, but it's not. It's not at all. It's sort of maybe someone with more means can afford to send their family members to rehab or something like that. But it's across the spectrum that it's affecting people. And there hasn't really been too much. We know that making it illegal doesn't work.
Right.
Because it's already,
Right.
So, but yeah, I think that does not seem to be. There was a period of time where there was a focus, and I think COVID sort of just like glossed over it. But it's worse now than it was prior to COVID.
Yeah. So I think just a few of the things that I mentioned, these are the reasons that, from an economic standpoint, I'm very, very concerned, because I think we're getting in a place where you're not going to have the economic growth necessary to maintain a strong level of GDP and job growth. It just becomes stagnant. If we're lucky, it becomes stagnant.
Right.
And I don't see any scenario where this could be fixed in a short amount of time. Even, let's say someone comes up with a great idea and we start implementing that idea. How long is it going to take to dig out of this hole? I mean, maybe kids that are in high school today, maybe they can benefit from this in 20 years if something happens, if something makes a plan. And
the one hope that I have is the positive sides of AI and automation. Mm-hmm. I know there's a lot of fear amongst that too, because it's like, oh, well, but I do think in terms of economic and GDP production, that can be a huge driver. I mean, the amount of money that is going into that sector is at least going to drive some sort of economic activity.
Right.
I think the fear is that is not going to lead to the increase in jobs that are typically come with that. Mm-hmm. However, we don't really have a shortage of jobs at the moment. I mean, job openings are higher than the available people. The problem is the skill set is misaligned and continues to become
skill set is huge
misaligned,
issue.
Right?
And then you have generations of people who are not properly prepared for this,
right?
And that's why when you see people, I live upstate New York, and it is very common for people to have 2 or 3 jobs because where I live, there's not a lot of skill up there. Like you said, the skill set doesn't exist for modern society.
Yeah.
So what do those people do? I mean, they can't. They're working a couple jobs, 2 or 3 jobs, and with that they can maintain.
Yeah.
They're still not saving. They're still not in a position where they can invest properly or as much as they'd like. So, yeah, there's plenty of jobs. I mean, every fast food restaurant in my town is hiring. I don't know what you can do with $13 an hour after taxes. So I don't know what it is, And Social Security, which you're never going to get. So it's a big issue, and I don't know how you get people to become properly skilled. I mean, I know some and at University of Vermont, they're actually giving free tuition to people that are studying certain things.
Right.
Yeah. So I think it was like education. There's like coding schools now that are just like, yeah, just come here, we'll cover it, and then we're gonna get you a job the second you get out, and then you just start paying us back from your job. I mean, people are just desperate for people that can do this work. But what happens with anyone that I would say is maybe 40 or above? What happens to those people in the next 20 or 30 years? What are they going to do?
Yeah, they have to continue to learn to operate with these new technologies and have to be able to ribbon.
You know what I mean? It's like, say you are, I don't know.
We need those injectable things like in the Matrix where you just
Elon's
upgrades.
He's got the Neuralink. New Neuralink, the second Neuralink was just installed actually.
Okay.
But yeah, I mean, if you think about people that say in their mid-50s that could potentially lose their job because nobody does those jobs anymore. They don't need those jobs anymore. They have kids. They're trying to save. They're supposed to go back to college now.
Yeah.
How are they going to do that?
Yeah.
So I think it's very worrisome. Again, not just from a social standpoint, but in terms of the economic standpoint, what's going to happen to those people where they're not making enough money to save, to invest properly, and then meanwhile they have to worry about coming recession, the inability to buy things that they were able to buy 5 years ago. So, I guess my point is, I think shit's going to get very bad, and we have to prepare.
Yeah. So let's talk about how we can prepare. I mean, besides the guns and ammo and seeds, that's a given,
how
right?
Did you know I had those on my list? Well, okay. So there are 2 ways to approach this. So obviously, there's just what we do here. We provide information and advice and guidance on how to deal with these situations. And we know that there are certain investment mechanisms that we can use that we will be protected in times of crisis.
Right.
We did this with Bitcoin, with gold. We see new industries on the horizon. Obviously, AI has been a big one. Quite a few of the editors here have done very well, and people that follow them have done very well investing in some of these AI companies. We're looking at some of the energy companies now that are working directly with companies that mine Bitcoin and also work with AI companies, because now they're such energy hogs, they have to have their own power plants to operate. So that's actually an opportunity. One of the things I really like because it's safe is, and I've talked about this in the past, the private solar, the private solar plan that we have in place, which is essentially there's a company that builds solar plants all over the world, and they allow you to invest directly into whatever project they're working on. So, say for instance, there is a power plant in Brazil that they own and operate, and they have a deal. They have a 20-year power purchase agreement in place to sell the electricity. So they have a market for the next 20 years.
Right.
So I can go in. I say, okay, well, I'm going to put $5,000 into this project, and they're telling me, okay, based on where this is and how much money they're going to get, the rate of return is going to be somewhere between 8 to 12%. That's a pretty big variation, but that's still higher than inflation, right?
Yeah, I mean, it's certainly higher than you're going to get in a savings account right
or
now.
Social Security.
That is even and the savings accounts are pretty good, at least historically in the past couple of years, because interest rates are high.
Right.
So if they do start cutting rates, then those are going to drop.
Right.
And so if you've locked in this 8 to 10%, it's going to look even better when you're only able to get 0.5% in your bank account.
Right. And I like it too because you can determine how many. So I think the max is 20 years.
Mm-hmm.
But say, okay, well, I'm going to retire in 5 years. And I'm going to need that money.
Right.
So you lock in and say, okay, I'm going to do it for 5 years or
Right.
7 years or 10 years or whatever it is. Obviously, the longer you hold it, the more money you make.
That's one thing that I think people don't tend to, I guess, understand about some of the stuff that we put out is, and why we sort of have, different letters and different, gurus, so to say, talking about different sectors, and why it's good to, subscribe to multiple ones, because everybody's situation is different, right? So I was talking to a buddy of mine whose kid just went to college last year, and they had a 529 plan, right, for college. And I was like, oh, man, the market's getting – he was like, oh, I'm glad I took money out for, to pay for this, semester like a couple weeks ago, right? And it's like, same thing for retirement. Like if you are planning on retiring in 5 years, you probably don't want to be in an investment that might be lower in 5 years or even not beat out the market. Whereas if you've got a longer time frame, you can afford to not panic on days like today, right?
Exactly.
If you're panicking because the market's down, in correction territory, and you're like, well, now I'm not going to be able to retire next year. Like, if you were planning on retiring next year, why the fuck were you in the market like that? You know what I mean? You need to be in something safe as you approach and plan that out. Now, it's not hard to do, but we don't know your situation, right? People have financial, like there's almost like no money managers anymore. They're just financial planners. And all they're doing is putting your shit into a spreadsheet. When do you want to retire? When do you, it's simple math. So, but those situations change, and only you know your risk level and your tolerance level and your plans to be put in. So, that's why we don't offer the personalized advice, because everybody's situation is different and you can change like that. So you kind of have to know that going in. So if you're somebody that wants those guaranteed returns, like that's a perfect, option for that. If you're someone that wants to trade penny stocks, then, we sort of have something for that.
Right.
In my opinion, you kind of do both, right?
Oh, yeah, absolutely.
But you have to know that, hey, this is my goal in 5 years, so I have 5 years to ride out the market, or I'm going to be needing to do X, Y, Z in 6 months, so I cannot afford to lose.
Right. Well, I've actually told younger people, too, to do some of these private solar royalties, too, because if they do, say you're, 25 years old, and you do 20 years, by the time you're 45, one of the plans, I believe, if you did like a monthly investment of like $1,000, you're gonna have it's something like it's close to $600,000 you're gonna have, from a very small amount, a small investment over the years. It's kind of like you put it in, walk away.
Right.
It's not going anywhere. It's gonna be there, and then, when the 20 years is up, you take your money.
And that's something that younger people are just gonna have to do, because no one in their 20s, I think, is like, oh yeah, don't worry, when I'm 67 years old, I will be, I'll just get money from the government.
Yeah,
like,
good luck with that.
Absolutely not. And by that time, it's not going to be 67. It's probably going to be like 75. You know what I mean? Like, that's the other thing that they're going to have to do.
Oh, yeah.
Is raise the retirement age.
Right.
Because people are living longer. Like you said, they're like, oh, when we started Social Security, we were planning on like a bunch of people dying after like, hitting 70. And now people are living longer, and it'll continue. There's people that think in a couple of years, like basically the life extension is going to cause people to live forever. So, that's a whole nother ball of wax that like our current economic setup is not set up to deal with at all.
No.
Even just people living 10 years longer than they typically are, 20 years ago, is going to completely like fuck over everybody's calculations.
Well, it's also, you consider when you live longer, people are living longer, but they're also living longer with a lot of health problems.
Yeah.
So it's like I have more pills to pay for. I have more doctor's appointments. One of the things that I've often talked about is in Greenship is yeah, we're offering investment advice. And some people don't like when I do this, but I'm like, you need to invest in yourself. You need to invest in your health. Because if you
Wait,
are,
some people don't like when you talk about that?
no, they're just like, I just want to know how to make money. I'm like, well, how much money are you going to lose if you're on freaking like blood pressure medications and heart medications and, insulin stuff because you eat too much bad food. You don't exercise regularly. You don't know how to like deal with your stress levels. All these things just eat away at your health. Yeah, great. You're gonna live to 100, but you're gonna be spending thousands and thousands of dollars a month just to live and feel like crap.
Well, and the quality of life is severely diminished as well. So,
Yeah.
yeah, that's a whole nother episode.
I know,
there.
but I do like to bring it up because I don't think enough people that do this when we talk about investing talk about it, and it's a very even if you can't imagine when we talk about the quality of life, just think about what you are paying right now just for your basic medications. Now, I'm 53, and I have medications that I take. I mean, it's not a lot, and it doesn't really cost me a whole lot, but I know plenty of people that are in their 70s, my parents' age, that like mountains of pills that they have to take every day.
Yeah.
And I know it's costing them a lot of money. And, every time I talk to my dad's friends, I got to take my buddy over to this test or that test, and that's costing them money. It doesn't make sense to me to invest all your hard-earned money into stocks or these private solar royalty plans and stuff like that if you're going to spend all that money on medicine and wheelchairs and stuff like that. It's like, come on, man, just think you have to think bigger than just like, well, what's my check going to be?
Right.
Well, my check is I'm going to have an extra $1,500 a month, but I have to pay $2,500 a month in medications. Well, so you're losing money.
Yeah.
So I do think it's really important that people should invest in their health. And earlier we were talking about if things get really bad, if things get really bad in terms of we become, again, vulnerable to our enemies and, the grids go down and all that stuff. How are you protected? And we kind of joke about seeds and kind of stuff. And I think it's good to have that kind of stuff anyway. But I also think that one of the most important things is electricity. And when the grid goes down, what are you going to do? Right now, the electricity goes off a little bit, it comes back on. But what is going to happen if it doesn't come back on? That's when shit gets scary. And I think, and I've long believed, that putting a solar power system on your roof with backup batteries is a really smart investment. Even if it's like, let's say the return on investment may be, let's say it's 15 years, which is pretty high. But the lifetime of that solar array and the battery is 25 years. You're still coming out ahead. It's long-term planning. Again, if you're younger, this is something you should really think about. Even having electric cars, say, oh, well, it costs a lot for the electric car. Eventually, the prices will go down. But I know for a fact that if the grid goes down, I charge every night, so I always have power. But the gas stations, the gas pumps aren't working. They have backup generators that only last so long. I know people that have generators that run on propane, which is fine right now. But if something does go south, where are you going to get your propane? I think these are things that if you can afford it, you should take it into account.
Yeah. Are residential solar costs coming down? I mean, I know you said 15 years. I mean, I know it's pretty conservative, but
I'm also including backup battery power, and that adds a lot to it. Yeah.
Okay.
And you also think too, like if you put that's not really a case anymore because I think nowadays people are more aware of it. But people put solar on their roofs, but also make sure that your house is properly insulated and you have you're conserving your energy and you have energy efficient appliances. So you could cut your electricity consumption by 20% by doing some very basic things. And you have solar panels, so this you're going to get more bang for your buck with those solar panels. I hate being like the doom and gloomer, but I am very concerned. I think that we're going to have a very serious attack on our infrastructure and our electric infrastructure, and it's going to be combined with social unrest. And I think things are going to be very bad. And I hope I'm wrong, but I don't think it makes sense to. I mean, if you can afford it, why wouldn't you do it? You're going to save money anyway, so make a few adjustments to your lifestyle. You don't have to miss out on anything.
True. Yeah, and we're talking about preparing. Yeah. Right.
Just preparation.
So, all right, Jeff. That's pretty good. If you want to learn more about Jeff's preparation for the end of the world,
I am actually working on a report right now for that.
okay, excellent. But yeah, editor of Green Chip Stocks, so we'll put a link to sign up. I think specifically we can put more information about the private solar as well in the description, and
there's a link in there that'll take you. So once you sign up, you get the report, and then I give you a link where you can go to the actual platform where you can actually invest right away.
Cool. We'll put that in there, and we always encourage your comments about anything we discussed here or anything we didn't, and we'll see you next time.